A very good morning to everybody. Welcome back to your live virtual classes. And we are dealing with the company accounts, which is the chapter number 11. And today we will be completing with the unit number 2. So, what did we see in the last class was quite simple. We have started out with the company accounts, and we are also seeing if a company wants to raise money by the issue of shares, what are all the accounting processes, what are all the accounting concepts related to the issue of shares. So, we started seeing these through the last two classes, wherein we also understood that the face value, which is written on the face of the share certificate that is issued to you when you get the shares of a company, that particular face value is not issued or it is not collected by the company in one installment. As per the SEBI regulations, in the best interest of the investors, it is always advised or a company has to break the face value into installments. Basic two installments can be there, which is the application and allotment, and then you can have any number of calls. So, in the questions, for ease of the questions, whatever we have seen in the textbook or what we have been practicing so far, we have got either one call, first call, or the final call. So, there are four installments. How do we do the accounting? So, when the shares are issued to the public and when the public give you money, and you are giving them in turn the shares of the company, which is nothing but in the total capital, you are making them the owners because they are the people who have given you the money. So, you are giving them the voting rights. We have also seen different kinds of shares. When we were talking about the accounting, I told you the simple accounting when you issue shares for cash is bank account debit to share capital. This is one single entry. But since we are following the installment method, we are not collecting the entire 10 rupees or 100 rupees in one lot. We are breaking them. So that is why I came up telling you for each and every installment, you need to pass two entries because we are introducing the installments. So in that way, we started understanding for application or for allotment or for the first call or the final call, there are two entries. Commonly, the entries can be called as the receipt entry or the transfer entry. Receipt entry, as you all can understand from the very name, bank is involved. When I'm getting money into the business, I have to debit bank. What I am supposed to credit? Either share application, share allotment, share first call, or share final call. When I'm going to pass the transfer entry, it means that ultimately the money that is collected out of the installments belongs to none other than the share capital. So I am going to pass the second entry, or which is called as the transfer entry, which says share application account debit to share capital. If you are passing for allotment, share allotment account debit to share capital. If it is for the first call, the debit side will change accordingly. When you combine these both entries, the ultimate effect will be bank account to share capital. That's all. Now, then we started understanding to introduce a particular concept of subscription. What is the meaning of subscription? A company can issue a particular number of shares. The public can subscribe or the public can respond to that by taking the same number of shares. Case 1, 10,000 shares company has issued, 10,000 shares public have taken, subscribed. Okay. That is called as a question or it is a normal subscription. I gave 10,000, you took 10,000, finish, over. You have to proceed your question with 10,000 shares. Case number 2, minimum or which is under subscription. In this case, company has issued 10,000, but I have got only 9,000. This is the case of receiving lesser value or lesser amount than required by the company. SEBI here has interfered and it has told whenever the company receives less amount or less number of shares have been taken up by the public, you need to check for one condition, which is nothing but the minimum subscription. Minimum subscription means out of the entire issued value, at least minimum 90% should be received. In my example, out of 10,000 shares, people have taken for 9,000, which is nothing but 90% minimum subscription criteria satisfied. So now I will proceed the question with only 9,000 shares. 10,000 will not be there in the question. Why, madam? They have given me lesser number of shares. That amount only I have. How can I take 10,000 when they themselves have given for 9,000? So in the case of an under subscription problem, lesser number of shares you will take. Check for the minimum subscription. If it is okay, continue with the question. If it is not okay, 90% not received, give a note in the exam stating 90% is not there. So we cannot go ahead with the question. Rather, the amount should be refunded back to the shareholders. Clear? Now we come to the third and the most important point, which is nothing but oversubscription. The company has got very good name in the market. Everybody wants the shares of the company. So what happens? The company have issued 10,000. I have received 12,000 shares. 2,000 shares excess I have received. So this is a case of oversubscription. When the oversubscription case came into the picture, I was talking about three things that you can do. Option 1, 2000 excess shares, completely reject them. I don't want headache for me. You gave me excess, I will give back your money. Return. Excess, reject. Or I can adjust and accept. This adjust and accept is also called as pro rata allotment. What is the meaning of pro rata allotment? On the excess 2000 shares, I will take your money now. And in the future, when I am making the next money or I am asking for the next money, which is allotment, I will first subtract this money and take the remaining value. It is nothing like I am giving you or you are taking, the company is taking an advance from the shareholders. So I gave you another simple example because in the unit number 2, issue of shares entirely, pro rata allotment or what we call as this adjustment, accepting where you receive more number of shares, very, very important. So that is why if you understand conceptually what is the meaning of an oversubscription problem and what is the meaning of a pro rata allotment, you will be able to do any number of sums given to you. So this pro rata allotment comes into situation whenever there is oversubscription. The meaning of pro rata allotment is simple. I am getting excess money from the shareholders, but I cannot issue so many shares. I can issue only 10,000. Then, madam, 2,000 in our example, what will I do with that particular money received on 2,000 shares? No problem. Let the company have it now as an advance. And then later, when I make the next installment, when I ask for the next installment, pay me money, that time I will subtract this amount first and take the remaining amount from the shareholders. So this is when we were talking about the oversubscription, the accounting entry or the accounting part seemed very, very, very simple. What is that? Only in the application, two entries. We usually pass every installment two entries. Like that in application, when we are passing the first entry, bank account debit to share application, I told you take the number of shares received. So when 10,000 is issued and 12,000 is received, I will take 12,000 shares because so many people have paid for my particular shares. They have subscribed for it. So irrespective of what you are doing, first I need to record how much I received. So in the case of an oversubscription problem, the first entry will be with the more number of shares. So here in my example, 12,000 into the application money. Now, what should I do with the second entry? Second entry is nothing but the transfer entry. I told everybody when you are passing for an oversubscription problem, immediately pass the CBA entry. What is the meaning of CBA entry? Very simple. So the second entry will be share allotment account debit, okay, to share capital, to bank, and to share allotment. You definitely pass this entry, irrespective of whether it is paid, not received, rejected, accepted. Pass this entry. Okay. So when you read the question, the share capital will always be the face value. Share capital will always be the face value. What is the bank? How much you are rejecting? So the number of shares into the application money, whatever you have rejected, that amount you will write here. What are you going to adjust? Number of shares that you have adjusted into the application money. Why, madam, you are considering only application money? Because at the time of getting or at the time of doing this particular thing, the shareholders will pay only the application money. So this is the example of or how to do a oversubscription. When you receive an oversubscription, immediately the second entry of your application, I'm sorry, this is not allotment, share application, you are supposed to pass this CBA entry. So remember this. This was the concept. First, we started with subscriptions. And then we went to shares are issued at par, premium or discount. So the shares can be issued at par, which is 10 rupees is equal to 10. Face value 100 issued at 100. So here par value, issue value are the same. But sometimes the company can be really popular and people want to purchase the shares of the company because they have a lot of trust. So in that case, even if the company is quoting a little extra, higher than the face value, they will purchase it. This higher than the face value is called as premium. I was talking the other day, Section 52 of the Companies Act deals with the premium. What should I do with this premium? Now, the premium that is collected is like a capital profit to the company. It will be shown in a separate account called as the securities premium account. It is not taken or added with share capital. Rather, it is shown on the same side along with the share capital. If you're crediting share capital, credit securities premium. If you're debiting the share capital, debit securities premium. The amount that is collected in the securities premium account can be utilized for five purposes. First thing, for issuing fully paid up bonus shares. What are bonus shares? How to account for bonus shares? Everything we will be looking at in the unit number 4. Then I can also use the securities premium amount to write off the preliminary expenses. I can use it towards the repayment, or just writing of the issue, that if I'm going to issue the other securities like debentures and preference shares, if I have to pay any commission or the discount on the issue of debentures, all these kind of expenses on account of issue of other securities can be written off from this securities premium amount. While redeeming the preference shares or the debentures, I can pay sometimes extra. So that extra is like a loss to the company. From where will you take securities premium? And finally, the fifth thing is, if you want to purchase back your own securities from the market, you need money. That money can be taken from the securities premium. Why I am stressing upon the section 52 and stating these five things again and again is because you can get an MCQ from these. Clear? So how am I going to account the securities premium is, as I was telling you, the securities premium account will come only in the transfer entry. Usually the premium will be collected along with the allotment money. Usually. Sometimes it can be collected even with application also. So whichever installment a securities premium is collected, I told you, please make the presentation very, very clear. So the presentation, for example, if it says so many shares are being issued at the rate of 10 plus 2 rupees. So this is the premium. You need to break the value and show. Apart from doing that, you should also show where and how this 12 rupees is collected. So if they say application 5, allotment including the premium is 5, what you should do? Open the brackets and first write what is the face value. How did you get the face value, madam? Simple. 2 rupees is the premium. Out of 5, if I'm going to remove 2, I will be getting the face value. So face value plus premium. Every time I told you, please follow this particular format or presentation in the question. When you read a shares question in your exam, if you follow this kind of a presentation which clearly says how many number of shares, what rate, whether it is given at a premium or not, you put plus. Where the premium is collected, you put this particular bracket. What is the face value? What is the premium? It is always advisable for you people to follow this particular presentation for two purposes. One thing is not missing a particular item when you are passing the transaction. And second thing is for increasing your speed. Every time you need not look into the question again and again. When you are reading the question, please make this particular presentation so things become really, really very, very easy to you. Clear all of this? 10,000 at the rate of this. So this is the second concept that we were talking about. Shares are issued at a premium. Madam, can the shares be issued at discount? As per section 53 of your Companies Act, it cannot be issued at a discount. No, but only in the case of sweat equity shares. Sweat equity shares are those shares which are given to the employees of the company because they have given their services, and in recognition you want to give them your shares. So that is why only lesser than the face value or lesser than the issue price, because if you give them at the same price, what is the benefit for the employees? In order to be beneficial to the employees, here alone for sweat equity shares alone, discount is permissible. So in these questions, you need not bother about how to account for discount because that is not there for the normal issue of shares to the public. So public can receive the shares either at the face value or at a premium value. If premium value comes into the question, I already told you, as premium is come into the question, I have already told you how you have to do. And a small kind information, the people who are there in this particular Zoom call, please wait, don't discuss, don't post anything on the chat. I will take all your queries at 12:45 sharp. I will unmute you, take your doubts, and then you can do it. Please kindly make a note in your textbook or in your notebooks, wherever, whatever doubts you are having as we cross the concepts. Okay, I will technically take all your doubts one by one very patiently. Coming back to the next concept, the third concept that we saw was there is a concept of calls in arrears and calls in advance. What is the meaning of this? My dear students, when we are asking the shareholders to pay the money, some of them will make a prompt payment where few of them can say, I don't have money, I cannot pay. In that case, such shareholders are called the defaulting shareholders. Okay, madam, they are not paying the money, so it is a loss for the company. What can the company do about this? Quite simple. The company has to show this loss separately under the account called as the calls in arrears account. Clear? Calls in arrears. So where will the calls in arrears come? It will come into the bank entry, or you called as the receipt entry. I was talking about receipt entry and transfer entry. So wherever, my dear students, when you are reading the question, you find that there is a call scenario. Some person is not paying to you, irrespective or in whichever call or whichever amount or wherever he's not paying, you are supposed to make a additional addition in your presentation. Okay. So the first thing is, suppose I say a person holding 1,000 shares has not paid my allotment money. Okay, if I say he has not paid my allotment money, what is the additional presentation thing you have to do? You have to put minus and then you have to bring it into the bracket. So when you bring the bracket, when you bring the bracket, then immediately when you are posting the receipt entry in the allotment, you will remember, array, there is a calls in arrears. Let me debit the calls in arrears. So the entry will become bank account debit, calls in arrears account debit to share allotment. Why, madam, you are debiting calls in arrears? Because it is a loss for the company. Has he paid? No. Clear? This is the concept of calls in arrears. And then your company account says, as per table F, okay, the interest has to be paid on the calls in arrears by the shareholder to the company. If the shareholder fails to pay the money, it will be taken to calls in arrears. Then when he is repaying the money, or when he's actually giving this particular money to the company, he's supposed to pay the interest at the rate of 10% per annum. Clear? So this is an income for the company. How should you show the income? So the income will be shown as you, it will be taken as interest on calls in arrears. So the amount that you receive will be interest on calls in arrears. So it will be shareholders. There are two entries that you have to pass, which I've clearly explained. I'm just giving you a quick run through. So it will be interest shareholders account debit to interest on calls in arrears. You're crediting the interest because it is an income. When you receive the money from the shareholders, the second entry will be bank account debit because you're receiving money to the shareholders account, that is interest on calls in arrears. Now there is a concept of calls in advance. So from the very name you can also say that it means that the shareholder, apart from paying the respective call, he has extra money, so he pays the subsequent call also. So in this example, if I'm going to tell a person holding 500 shares, when I make the allotment, he paid allotment and he also paid the first call money. So I am going to write something called as plus. So when I use the word minus, it is calls in arrears. When I use the word plus, it is calls in advance. So please train your mind to write it in this way. So it becomes very easy. Where will this come? Again, it will be coming in the receipt entry only. But the only difference is the calls in arrears will be debited, the calls in advance will be credited. So immediately you should not understand this is an income, it is a gain. No, it is liability. Company is receiving the shareholders money in advance. Okay, that is why you are crediting it. And when the subsequent call, this call is being made, what you should do? When you come to the receipt entry of the call, you should first subtract this amount and remaining only you should ask, because already one person has paid the money to you. So you are going to remove his value and remaining only you are supposed to ask. Whenever calls in advance is given to you in the question, in your presentation, it is very, very important that you make a note this way. What is this? It is simple. When you say plus in a particular call, it means that it is calls in advance. So in the receipt entry, you should not forget to write it on the credit side. So this way, we have seen one illustration which spoke about both calls in arrears and calls in advance. So we passed the entries. We also found out how much the interest was being charged. And for the interest, we passed four different entries. Two entries for calls in arrears interest, calls in advance interest, two things we passed. Coming back to the table F for calls in advance, it is 12% per annum. It is 12% per annum. What are the entries? This is like an expense to the company. The person's money you are holding. So company is liable to pay the interest. So the two entries will be interest on calls in advance debit because it is an expense to shareholders. Second entry, when you make payment to the shareholders, shareholders account debit to the bank. That's all. As simple as that. When you are calculating the amount of the interest, very importantly, take the percentages. So if you are calculating for calls in arrears 10%, calls in advance 12%. See the number of months. Sometimes in the question, they can give you the dates. So from this date to this date, how many months are there? Or directly they can give you the number of months also. In that case, take the number of months, divide by 12. Either 2 months or 3 months or 4 months, divide by 12. Arrive at the interest and pass the entries. So we finished calls in arrears and calls in advance. Then we went to one of the most important concept is forfeiture. What is the meaning of forfeiture? You have studied law. Forfeit means to take away, to cancel. Why am I studying this concept in the share accounting? It is because when the person, when the shareholder consistently defaults, he is not paying your amount. So what should I do, madam? Person is not ready to pay. Several installments he is not paying. So then I can take the option of canceling his shares, take back my shares from him. The process of canceling the shares allotted to a particular shareholder is called as the forfeiture. So when the forfeiture came into picture, we solved two illustrations. So what is the entry that we were passing for forfeiture was very simple. Forfeiture means taking back the shares. So when you issue shares, the entry was bank account to share capital, but technically there were so many allotments, installments. So we had two entries, but the simple understanding was bank account to the share capital. When we are taking back or forfeiting the shares, it will be the opposite. That is nothing but share capital value decreases. So I am going to debit the share capital. There are two accounts that I have to take. One is the calls in arrears. The reason for him or for me or for the company to take back his shares is he's not paying it. Correct? So now when I'm taking back his shares, I should now close the accounts pertaining to the defaulting shareholder. So how much is the actual shares I have given to those is the amount he has not paid. That means he would have paid something. No, the logic is, my dear students, every person to become the shareholder of the company will definitely pay the application money. If he does not pay the application money, he does not become a shareholder at all. So the amount paid will be at least, I'm not saying only application every time, at least application. That means in some cases he can pay even the allotment money and then default in the calls. Clear? So at least the application money will be received. So when I got that particular amount, I debited the bank. Now, madam, since I'm closing the shareholder's account, I don't want him in my books. Whatever amount he paid also, I will now reverse that. I will take it and put it in a separate account. That account is called as the shares forfeited account. In the last class, when I finished, there was one student who was asking what is the meaning of shares forfeited account. Shares forfeited account, my dear students, it means that the amount that has been collected or the amount that is being paid by the defaulting shareholder on the particular shares. He has subscribed for certain shares, and what is the amount he has paid for those shares? I am going to write it here. As simple as that. Okay, share capital account, shares forfeited account, and calls in arrears. This is a normal forfeiture entry. But here I can have case 2 also. What is case 2? The shares are issued at a premium. Okay, and the premium amount is not paid. When the premium amount is not paid, that is also like a loss to the company. The only difference is you should show the securities premium on the debit side as well. Clear? You should show the securities premium on the debit side as well. As simple as this. Clear? That is also when this condition is satisfied. When the premium is not paid, premium is not received only, you are going to debit the value. Otherwise, don't debit it. It is okay. Okay? You, whenever the share is issued at a premium, but it is paid, premium is paid, then don't bring the securities premium into the question. It will be just share capital to shares forfeited to call scenarios. Only if the premium amount is not paid, he has defaulted, then you will debit the securities premium. Okay. We have seen in this particular connection illustration number 11, 10 and 11, wherein it talks about the shares forfeiture. Now, my dear students, the entire concept of a company going in or issuing shares is it needs money for running the business. Suppose the person is defaulting like this. What is the option available to the company means it can forfeit the shares, and after forfeiture, it can also do the second time issue, which is called as the reissue to another person, because the company's ultimate goal is it has to receive money. What if one person is not paying? I have anyways taken and closed his account. No. Now let me go and reissue the shares to another person. So when I am going to reissue the shares to another person, it will be called as, or what is the entry I will make? Very simple. Bank account debit to share capital. Normal entry. When you are issuing shares for cash, also this entry only. But there you had so many installments. So you passed two entries, right? But then now what happened, or what we are doing is, when you're doing the reissue also, one single entry, again installments and all not there. Same value collected at one shot. So SEBI does not interfere. It says originally you issued at this particular installments, but the person didn't pay. Now take back your particular value, take back the particular value, and then show it here in one installment. Okay, so bank account debit to the share capital account. But here, my dear students, since the shares are issued again, they are called, or they will be classified as second hand shares. So, second hand shares means lesser value. So, there might be a loss. So, when the 10 rupees worth share is issued at 8 rupees, there is a loss of 2 rupees. So, that loss will be taken from where? This value that is already paid by this particular shareholder, I will bring it here. So I will be debiting shares forfeited account. How much? Shares forfeited account. Why? Because if when you are reissuing, if there is a loss on reissue, that means the entire 10 rupees the shareholder is not ready to pay. He says, this is a second hand share. I don't want it. Give it to me at a lesser price. So that in that you can sell it at a lesser value. Obviously, you need money. So that particular amount of the loss, that particular amount of the discount, whatever you call it, it is like a loss. It will be taken from the shares forfeited. Why, madam, you are taking from shares forfeited? Simple logic. Because of whom this entire thing has happened? Because of the defaulting person. So when that person has defaulted, should he not make good the loss? Now does he money? Now does he have money to give you? No. So already when he had money, whatever amount he has paid, I have shown it under shares forfeited account. So now what I will do, take the money from that and take for my loss. So let us assume 5 rupees he had paid, and the loss on account of reissue is 2 rupees. Okay. Now what is the value remaining? Madam, he has paid 5 rupees. Only 2 rupees is the loss. 3 rupees is my profit. That means still shares forfeited account has got 3 rupees balance. That means this is a capital profit to the company. So the last entry after passing forfeiture entry, after passing reissue entry, you are supposed to check if any balance is remaining in the shares forfeited account. If it is remaining, then you should pass one last entry, shares forfeited account debit to the share capital, to the capital reserve. This is the profit that is transferred. Why, madam, capital reserve? Because capital reserve records all the capital profits made. And when the shares are forfeited and you get a profit, After the reissue entry, then you should take it to the capital reserve account. Okay. This was the concept that we spoke in the last class. So until the last class, we did these particular concepts and we solved every illustration possible in the class, and few illustrations I've asked you people to work out, and I hope you have worked out. If you have worked out and you have any doubts, please let me know at the 12:45 session. Now what we do when we go ahead, you can ask me comfortably and we will try to solve that then and there. Okay. Now, after coming here, there is one concept. If it is going to be this easy, then what is the issue? Now, there will be few particular elements or adjustments. What is that adjustment, madam? My dear students, I can have, suppose let us say, I am passing the share forfeiture entry. I am forfeiting 1,000 shares. What is that? A person has not paid money on 1,000 shares, so I am forfeiting 1,000 shares. Okay, madam. Now reissue, what I am doing is entire 1,000 rupees, 1,000 shares I need not reissue. So I am thinking I don't need so much money now. So out of 1,000 shares, I will only reissue 750 shares. So this is the decision of the company. The company will do as it likes. No cancellation. Yes, it is the company's decision. After giving so many notices, even then the person does not pay, company gets a right to cancel the share. So it cancels all of the shares. Shares may cancellation you cannot do partly. Whatever entire shares that person has not paid entirely, you will cancel. But when I do the reissue, technically I need not do the entire reissue. That means even though I have cancelled 1,000 shares, based on the requirement of the company, if I reissue, that is enough. Okay. So in this example, my dear students, if I am saying 1,000 shares are cancelled, out of which only 750 shares are reissued, not the entire shares, then what happens? For calculating this profit, you should use a formula. You cannot easily write this 5 minus this 2, 3 rupees. You cannot do that directly. So in the question, you should always be very, very alert, because your concepts will be tested only in these three entries, because oversubscription, pro rata allotment, premium accounting, calls in arrears, calls in advance, interest on calls in arrears, interest on everything is very easy. The only adjustment is in this particular thing. So what you should do, the formula that you should use, profit that I made for how many shares? 1,000 shares for 750 rupees. How much amount is the shares forfeited? You need to find out how much amount of the shares forfeited pertains to the reissued shares. That means, simple example, I will tell you, suppose he has paid 5,000 rupees on 1,000 shares. So I am going to write 5,000 rupees divided by 1,000. So I will get 5. Correct? So the shares forfeited for 750 shares will be 3,750. How, madam? I divided, I cut it. So 5 into 750, 3,750. So now I am reissuing 750 shares at this. So this comes to 1,500, which is 2 rupees into 750. 1,500 is the actual loss. Now, what is the entry? What will be the value? It will not be directly 3 rupees, but I am subtracting the loss from the value converted. I am not taking 5,000. Please see, I am not doing 5,000 minus 1,500. No, because only part of the shares are reissued. So I am finding out using this formula. After finding out the exact share forfeited value pertaining to 750 shares, I am writing it here. I am taking the loss, I am subtracting the loss, and the value of 2,250, I will write it in my last entry. So, my dear students, the company need not reissue the entire shares forfeited. It can sometimes reissue only part of the shares. In this particular case, you should be careful when you pass this particular capital reserve entry. You should show this particular working note, which will carry marks in your exam. So, whenever you are doing the same problem, shares problem in the exam, you people have to remember, read the entire question. They will give you an entire question starting from so many shares. There might be an oversubscription in the problem. There can be premium in the allotment. There can be calls in arrears coming. Then subsequently, after making all the calls, the shares forfeited entry will come, then reissue entry will come, and finally the capital reserve. So when you are passing a minimum of 8 plus 3, 11 to 12 entries, you will be given the marks accordingly. And that too, the highest number of weightage in that question will be given to this working note. So my dear students, very, very important to understand the working note. What is this? When I am canceling the shares, I will be showing shares forfeited account. What is this account? It is nothing but the amount that the defaulting shareholder has paid on the shares which he was holding. So that I am showing separately. I am crediting in the forfeiture entry. But next entry, what is happening? I am doing a reissue. So when I reissue a forfeited shares, sometimes I can reissue at a lesser value. So that loss should be taken from the shares forfeited. So the shares forfeited account after reissue, after it is over, if any balance is remaining, it should be transferred to the capital reserve because it is like a capital profit. So shares forfeited to capital reserve over. But sometimes here the major adjustment is the entire shares forfeited need not be reissued. A part of them can be reissued. Like in this example, out of 1000 shares I can reissue only 750. In that case, what I have to do for finding out what is the value of capital reserve, I should go for the working note. What is the simple logic of the working note? Simple. For 1000 rupees he has paid 5000. Okay, so for 750, what is the corresponding value I have to find? So in your particular thing, 5000 shares forfeited amount divided by 1000, okay, into 750. So the actual value of shares forfeited pertaining to 750 shares is 3750 minus, when I did a reissue, I got a loss of 2 rupees. So 750 shares into 2500 is my loss. Now when I subtract both, the value that I am getting, this is my capital reserve value. So now my dear students, out of the entire 5000, 3750 only has been gone. So the remaining value of how many shares unissued? There are still 250 shares which are not reissued but there with the company. What is the value of shares forfeited for that ma? The value of shares forfeited is this 5000 minus 3750, which is nothing but 1250. This will still come in the balance sheet. So you people need to remember, if the shares forfeited are not entirely reissued, then there will be a portion that is still sitting in the shares forfeited account. You people need not worry. I will give you notes in the form of PPTs. You can see that, you can write the notes and practice. Is this clear, everybody? The shares forfeiture entry followed by your reissue entry. The third important entry is your capital reserve entry. So with this particular note, I would like to very quickly read the question number 14, go ahead and then solve and show it to you. All of you, please see your particular the screen, wherein I'll be sharing the screen. Yes. So don't worry, the board will become really small, but I will again, whatever I'm doing or whatever I'm seeing here, I will be writing it on the board anyways and explaining it again to you. Clear, everybody? So all of you, please see here. Mr. Long, who was the holder of 2000 preference shares of 100 each, on which 75 has been called up. My dear students, I told you the concept here. Whenever you are forfeiting or making a forfeiture entry, the main thing is the face value. So here the face value is actually 100 rupees, correct? But there is a concept of called up value. Madam, which value I have to take? Last class, I clearly explained to you the lesser value. Whether the called up value or paid up value, whichever is less. So here 100 rupees is called up, but 75 rupees is only actually paid up. So you will take 75 rupees only. Okay. So the share value or the share capital will be multiplied with 75 rupees. Okay. So he could not pay his dues on allotment and first call each at 25 per share. Okay. When you are reading like this, so the directors forfeited his shares and reissued 1500 of such shares to Mr. Short at 65 per share, paid up at 75 rupees. So give the journal entries. Whenever I told you, my dear students, you read a question, it is very important for you to make the presentation. Shares Everything is based on the presentation. Otherwise, shares is a very, very easy concept. Okay. It becomes easy when you just post the entries and do it properly. Okay. Here, there is a person called as Long, and he was holding 2000 preference shares. Correct? So the face value of the shares is 100, but 75 rupees paid up. So I will take 75. In that, my dear students, they have given you an information saying allotment money and call money he did not pay. Allotment and call money 25 rupees each. So I take allotment 25. I take call money 25. Now you can get a doubt, madam. First doubt is 100 or 75. I told you 75. Okay, madam. So here total should be 75. That means if he has not paid and call money, he would have paid only the application money. But do you know, is it given in the question directly how much is the application money? No. So what you will do, you will go by the indirect method. So the actual paid up value is 75. In that 25 is allotment, 25 is call. 25 plus 25 is 50. So 75 minus 50, the remaining value will be the application value. Okay. So this person, Mr. Long, has paid application. He has not paid these two calls. Clear? Now the second part. After forfeiting his shares, you are reissuing the shares to another person, Mr. Short. How many shares you are reissuing? 2000 forfeited, only 1500 you are reissuing at rupees 65. But the face value or the paid up value is 75, which means that he wants to tell that 75 worth share is being given at 65. The loss is 10 rupees here. When you are doing the reissue, I got a loss. So the actual meaning, what he's trying to say is not all of this. There is a loss that is happening. So what I should do? Let us see the entries. It is a normal question, my dear students. There is no premium involved in the question. The shares are originally issued at par 25, 25, 25, 75. In this 25 rupees, he has paid application. He has not paid allotment and the first call, which is 25 plus 25. Is this clear? Now, please come here. For the share forfeiture, the first entry will be, or the first account that I have to debit will be share capital account debit. There is no securities premium because securities premium is not given in the question. If there was securities premium, you people need to check if the security premium amount is received or not received. If received, please leave, ignore. If not received, please go ahead with the question and debit securities premium. Clear? So share capital account to shares forfeited to calls in arrears. As simple as this. Clear? Now, how am I going to write the amounts? Very simple, my dear students. So, how many shares are forfeited? 2000 shares are forfeited. What is the face value? It is the paid up value I am taking. So, it comes to 1,50,000. Three zeros? Yeah, 1,50,000. Out of which, how much he has paid? 25. So here it will be 2,000 into 25, which is nothing but 50,000 he has paid, and 2,000 into 50 he has not paid, which is 1 lakh. The narrations are very important. So being 2,000 shares forfeited. That's it. We have passed the forfeiture entry. How much he has paid will go to shares forfeited. How much he has not paid will go to calls in arrears. And the face value. Here the face value, paid up value or the actual value, whichever is less. So we have taken the lesser value. Clear? Now we come to the reissue entry. Very simple. When I am reissuing the shares, I will be debiting the bank account debit to the share capital because I am reissuing the shares and getting money. But am I reissuing the entire value? No. So only 1500 shares at 75 I am reissuing it. What is it? 1500 shares into 75. The value will be 1,12,500 into 75. That is the face value. But actual value at what you are reissuing at 65. So 65. So 10 rupees less I am doing it. I am issuing it at 97,500. There is a loss. Debit side is less. So I will be taking that to shares forfeited account debit. How much is the loss? 10 rupees. So 1,500 into 10 comes to 15,000. This is the loss. What is the narration that you will be writing? The 1,500 shares reissued to Mr. Short. When you keep practicing more and more, when you pass the entries, you will be able to maintain your speed to write the narration also. Otherwise, it will become difficult and you will say, Madam, no time, no time. Okay. Now, the last entry is nothing but your share cap capital reserve entry. So here we'll post the capital reserve entry, which is nothing but shares forfeited account debit to the capital reserve. Now you people have to tell me, shall I subtract 50,000 minus 15,000 and take the value here? Definitely no. Why? Because, my dear students, there is only a part reissue. 2,000 shares are forfeited and only 1,500 shares are reissued. So what you should do? Go to the working note, okay? So for 2,000 shares, what is my shares forfeited value? 50,000. So for 1,500 shares, it will be how much? 50,000 divided by 2 into 15. So it will come to 37,500. Madam, how did you arrive at this? Simple logic is 50,000 divided by 2,000 into 1,500. That is the answer of 37,500. 37,500 is the actual value minus the loss now. So 37,500 minus 15,000 gives me 22,500. That is the amount of shares forfeited transferred to the capital reserve. This becomes very important. So this is what I was telling you earlier. If the shares are not entirely reissued, what are you supposed to do? I am supposed to find out, go to the working note and find out what is the amount of share forfeited received. And from that only I should subtract the loss. I should not directly, I should not do 50,000 minus 15,000. Rather, I should go to the working note and find out how much is the corresponding value. So the corresponding value comes to 37,500 and from that I am subtracting 15,000. As simple as this. Clear? So now let us go very quickly to the next important and a full-fledged question wherein we are going to see how this kind of pattern only will be coming mostly in your exam. So they have done the same thing that I have done. Okay, they have given you this particular thing. So this illustration number 15 is an illustration which involves the entire problem. So we will be working out the illustration number 15 now. Beautiful and Company issued 30,000 equity shares. So let me just rub the thing and keep reading the question for you so that we will keep posting the entries. Okay. The Beautiful Company Limited issued how many number of shares? Issued 30,000 equity shares of rupees 10 each payable as 3 rupees on application, 5 rupees on allotment, including how much is the premium here? 2 rupees is the premium. So this is a question. He has given you 2 rupees. So the meaning is 30,000 equity shares. Now I am writing it here. And when I remove that particular, stop the screen sharing, you will see 30,000 equity shares at 10 plus 2. And it is divided as on application 3, on allotment 5, and 4 rupees on call. So it comes to 12. The moment there is a premium, I should show the breakup. So I am writing under allotment the 5 rupees within brackets 3 plus 2. This is the basic presentation I need to do. Please see here. all the shares are subscribed. So this question is a normal subscription. So madam, when I read the question, how I should understand? The simple clue given is all the shares issued were subscribed. So it is a normal. No excess, no undersubscribed, nothing. We don't even have the headache. Very good. Now please see the next part. Money due on all shares was fully received except from Ram, who was holding 500 shares, failed to pay the call money and allotment money. So all of you please see here, simple. I have written 30,000 shares at 10 plus 2. Premium is there in the question. 354. And in the allotment, since premium is collected, 3 plus 2. Now I am going to make a note of Ram's shares. There is a person called Ram holding 500 shares. He has not paid. All the monies were received except the shareholder who did not pay on the allotment, and he also did not pay on the first call. So whenever there is a calls and arrears in the question, simple. What did I tell you? I told you to put that minus and show it in the presentation. So there is another person, Shyam, holding 1,000 shares, failed to pay the call money. So Ram holding 500 shares failed to pay two calls, which was allotment and first call. Then Shyam only the call money. So there are two people. Clear? All those 1,500 shares were forfeited. Out of the shares forfeited, 1,250 shares were reissued to Jadu as fully paid up at a discount of 2 rupees. So, my dear students, till the forfeiture entry, it will be very, very easy. Now, even the reissue entry will be easy. Capital reserve entry only, there might be a problem. Okay. Shall we start doing it? So, total how many shares? Ram's shares. Shyam shares. So total 1,500 shares were forfeited. But out of that, how much you reissued? Only 1,250 you have reissued. Here, what is the clue that is given to you? Ram shares are completely reissued. Then Shyam shares, how much you need more? Only 750 were reissued. So when we pass the entry of forfeiture, we should carefully calculate the proportionate amount of Shyam's shares. Clear, Amma? Shall we start doing? So it will be in the books of Beautiful Limited. Whenever you start passing any particular entries, the camera is a little blurring, it's okay. When you start passing the entries, the formatting for a particular journal entries of the problem should be very, very clear. In the books of Beautiful and Company Limited, journal entries, date column, particulars column, ledger folio column, amount and amount, two amounts, because debit and credit will be there, no? So you will be writing debit and credit in the form of amounts. So the first entry I will be making is the application entry. How many number of shares, ma? 30,000. So the first entry will be bank account debit. In since there is no place, I am not writing Beautiful and Company, but whatever I am telling, please listen attentively. Okay? It should carry all your presentations will get counted in the exam. I have written a little up, there is nothing. So 30,000 into 3. So the first entry is the bank entry for application, bank account to share application account. What is the narration? Being money received on application. Don't use short forms, please write the full forms. After you do the receipt entry, the second entry will be the transfer entry, share application account debit to share capital account credit. What will be the amount? Same amount, no CBA, no lesser number of shares, because it is a normal subscription problem. What will be the narration? Transfer entry being made. So the first entry, receipt entry and the transfer entry for application we have passed. Now come to the second. We are now going to the allotment. First, what entry we will pass? Transfer entry. All of you please see very carefully. It will be share allotment account debit to share capital. This will be the normal entry. But the moment you see the question, you should see there is a premium in the question. So what we should do with the premium? We should take it to the credit side to a separate account called as securities premium. Clear? So here the thing or the adjustment that you people have to do is whenever there is a premium in the question, it will come into the transfer entry. Since here it is collected with allotment, I am taking it here. So it will be by transfer entry made. Okay, transfer entry made. Shall I tell you what are the amounts? Just a minute. Yes. Shall I tell you what are the amounts? Will you tell me? Now 30,000 straight to allotment. I will write 30,000 into 5, which gives me 1,50,000. But what is the face value in the 5? Within the brackets, what is the first thing? 3 rupees. So 30,000 into 3, straight to share capital, I will write that value. Okay. Straight to share capital, I will write 30,000 into 3. Why, madam? This is the face value. What is the value of premium? 2 rupees. So 30,000 into 2, 60,000 will come in the securities premium account. Clear? Simple. In the transfer entry, since there is a premium, I am crediting the premium here and I am showing it as simple as that. So after the transfer entry, we will have the after the transfer entry, we will have the receipt entry. So in the receipt entry, it will be the bank account. Okay. Bank account debit to share allotment. So here, my dear students, you people have to remember there is a minus sign. What is the meaning of this minus sign? It is nothing but there has been a calls in arrears. So what has happened? There is nothing but a calls in arrears in the question. So when you have a calls in arrears, what you should do? In the respective receipt entry, you are supposed to post the calls in arrears. On which side? On the debit side. Why? Because it is a loss for you. So the entry will be bank account debit, calls in arrears account debit to share allotment. Madam, where will I take share allotment value? From the previous entry, 1,50,000 will come here. Now, madam, what about the calls in arrears? Very simple. How many shares is this particular person holding? 500 shares. How much is the value of allotment he has not paid? 500 into 5, 2,500 he has not paid. So how much would be received? Remaining amount. What will be the narration? Amount received except 500 shares on allotment. That will be the narration. Okay. So the amount is received except for the 500 shares here. So what did we do? Application 2 entries over, allotment 2 entries over. So the next thing will be, I will pass an entry for the call money. In the call, do you have a premium? No. So it will be share call account debit to share capital, because first is the transfer entry I have to pass. As simple as that. So 30,000 into 4 rupees, 1,20,000, 1,20,000. So this is the transfer entry made. Next will be the bank when you are receiving. So I will be writing that entry bank account debit to share call account. Correct? How much is the share value? 1,20,000. Now see the presentation. Two people have not paid. What are the total number of shares not paid? 500 shares Ram, 1,000 shares Shyam. Total 1,500. How much is the value they have not paid? That I will take it to the calls in arrears account. Clear? How much it will come to? 1,500 into 4 rupees. So it is 6,000 rupees they have not paid. So I would have received the remaining 1,20,000 minus 6,000 gives me 1,14,000. How madam calls in arrears came? Two people have not paid. So 1,500 into 4. That is the call value that they have not paid. So it will be the amount amount received except for 1,500 shares on the call value. Okay, so for the call also we have passed the entries, transfer entry and the receipt entry. Now after doing all the calls, the company has decided to forfeit the shares which they are not paying. Ram shares, Shyam shares. So my dear students, if you ask me whether I should pass it together or should I subtract it and pass, for saving the time you can pass it together itself. Okay, now please see shares for share capital account. Forfeiture entry will first start with share capital account debtor to shares forfeited account to calls in arrears. This is the usual entry which we have studied till now. Now you tell me how many people shares are there? Rams and Shyams are there, correct? Ram has defaulted in allotment and even in the call. But Shyam has defaulted only in the call. Clear everybody? In this question, the shares are issued at a premium. Clear? So you should also think about the concept of whether premium is paid or not. Now come here. Ram 500 shares he has not paid in the allotment, which means that this person who is holding 500 shares has not paid the premium. But Shyam, yes, he paid allotment, but he did not pay only the call value. So, madam, out of these two people shares also, there is a small adjustment for the premium. I told you whenever there is the securities premium amount is not received, I have to take that on the debit side. But the small trick here is not for the entire value. Only for Ram share of 500 rupees, the premium was not collected. Is this clear, everybody? Just I am writing the entry. I have not even written the amount. Okay. Shall we go to the amount, my dear students? I will tell you a easy way to pass the shares forfeited entry ka amount. Okay. So the first thing is how many shares are forfeited? 1500 shares are forfeited. What is the face value? The face value, all the calls are made. So I will consider this as my face value 10 rupees. Okay. Share capital, I am debiting 15,000. Is this clear? All the calls are made and the face value comes to 10. So I am taking 10, 15,000. In this question, if the full calls are not made, then you should not take 10. You should subtract the call which is not made and then only see here. Because in the earlier question, Mr. Long, Mr. Short, what happened? Out of 100, we considered only 75 because only so many calls were made. I told you lesser value. Here, we know all the three calls are made over. That is why we are taking this value. Why, madam, we are not taking 12? Because direct to the share capital, always the face value only will come. Okay. So the face value, which is 10 into how many shares are forfeited? 1500, 15,000. Now, securities premium, who has not paid? Only Ram has not paid. How many shares? 500. So 500 into what is the value of the premium? 2 rupees. So it will be 1000 rupees he has not paid. Now, when I come here, it is very difficult to do how to find what amount he has paid, not paid. Then, my dear students, I will tell you a easy thing. Please see here. Go to your original issue entries and see how much is the calls in arrears amount. Okay. Calls in arrears amount is how much? In this entry, 2,500 and this entry, it is 6,000. Add both. So total calls in arrears will come to 8,500. Take the shares forfeited as the balancing figure. Then you will not make a mistake. What did I do? I didn't do anything. Debit side, you should know how to write. Then only you can take the credit side as the balancing figure. So share capital, how many shares are forfeited? 1500 into 10 rupees, which is the face value. That is 15,000. Securities premium, those shares out of this Ram and Shyam, who has not paid the securities premium? Only Ram has not paid because he has not paid allotment money. Premium is collected with the allotment. That is why I am telling you debit the securities premium. Value 500 into 2 being 1500 shares forfeited. Clear? So that comes to this much. Shares forfeited is 7,500. That will be the balancing figure. How did you take, madam, balancing figure? Calls in arrears already I know 2,500 from this entry and 6,000 from this entry. I have just added these two and taken it here. And the remaining, I think I've written it. Okay, here I will write 7,500, 8,500. So this is 2,500 plus 6,000. I have taken it from those two entries. Take this as the balancing figure. Now the next part will be reissue. When I am reissuing to somebody, I will usually pass this entry of bank account to share capital. But he has given to you in the question clearly that it is being reissued at a discount of 2 rupees. Discount of 2 rupees, which is nothing but loss. Correct? So I will take the loss to shares forfeited account debit to the share capital. Okay. So now how many shares are reissued? Not fully, madam. Only part of it. So it will be 1,250 into 10 because share capital is always the face value, which is 10. Clear, everybody? Now shares forfeited, what is the loss or what is the discount value? So that will be 1,250 into 2. 2,500. So how much will be received? 1,250 into 8, which is 10,000 rupees. This will be 1,250 shares reissued to Mr. Jadu. Jaddu or Jadu. Okay. Jadu's broomstick. No. Jaddu. So now coming back, the last entry will be the capital reserve entry, which will be shares forfeited account debit to the capital reserve. Okay. So this entry, my dear students, you are supposed to find out what is the value. So now coming back, we need to do a working note for this. So what will be the working note? Okay. I need to get some space here. So let me do one thing. I am just going to rub this particular entry. Okay. And we will try to fit in. Now, how many shares are forfeited? We have Ram, we have Shyam. We have forfeited 500. We have forfeited 1,000. So 1,500. In that, how much we have reissued? Fully Rams. And from here, only 750. So now please see here. We need to take the shares forfeited value. So we come to this value and we need to see how much is the money paid by them. How much is the money paid by them? Now, if I tell you 7,500, you will not know who has paid. In this entry, I told take this as balancing figure. But when you come back and do this question, you should be very, very careful because two people are there. Two people would have not paid uniformly. So I am now supposed to find out how much each person has paid. Simple thing. 500 Ram, he did not pay allotment. He did not pay the first call. That means he paid only this 3 rupees, which is application. Correct? He paid only the application value. Clear? Now this person Shyam, he has not paid only the call money. That means he would have paid application plus allotment. Yes, he would have paid application plus allotment. Here there is a small thing you people have to remember. Whenever there is premium and the person has paid premium, take away the premium from the question. So I will now have to consider 3 rupees application he paid. And in the allotment also, what is the face value after removing premium? It is 3 rupees. So on 1,000 rupees, he has paid 3 plus 3, 6 rupees, which is 6,000. This is the breakup of the 7,500. My dear students, this 7,500, I asked you to take it as balancing figure. Now I showed you whose amount, how much is there. So 1500, this value of Ram, and 6000 rupees of Shyam is sitting in this 7500. But my dear students, I want the proportionate value. Proportionate value. What is proportionate? This 1500 I will take fully. But here how much? For 1000 shares, if it is 6000 rupees. For 750 shares, it will be six. Okay, 715 share, 50 shares, it will be 4500. I have converted it. That is nothing but 6000 divided by 1000 into 750. So the actual value will come to 6000 rupees. Now, how much is the loss? Minus 2500. So the final entry will be 3500. 3500 amount transferred to the capital reserve. Okay. Now, my dear students, what is still amount pending, ma? For Shyam, total received was 6000, but I took only 4500. So 1500 still shares forfeited account. There will be a balance because I have only partly reissued. I have not fully reissued. So I will be considering it like this. I will be considering it only partly reissued and not fully reissued. Clear? So this is a complete problem wherein like Mr. Long, Mr. Short, it was all in portions, bits and pieces. But we have now solved a complete question which talks about the issue entries where there is issued at premium, and then the forfeiture entry, reissue entry, and the capital reserve. And here the most important or the technical thing that was given to us was they told very clearly two people shares we are taking. Two people have not paid calls respectively. So one person did not pay allotment and call, the other person did not pay only call. So where the actual confusion will start is only in the last three entries. Till this entry it will be very very easy. This entry also you can pass, but when you go for this entry I will re-explain this once again to you. Please very very carefully listen. Were forfeited. Shyam's 1000 shares. So total 1500 were forfeited. Out of that, I have reissued only Ram share fully, but only a part of Shyam's shares, which is 1250. How did you find 750, madam? Because in the question they told out of 1500, 1250 reissued, which includes fully of Ram share. So I have found the 750 as my balancing figure. Okay, out of 1250, 500 is Ram's, remaining will be Shyam's. Okay, now in this particular reissued, I now found out what is the actual, not in that actual for these shares forfeited, how much they actually paid. So then I went into the working note. Ram would have paid only the application because he has defaulted in allotment and even in the first call. So he would have paid the application value of 500 into 3500. Now Shyam would have paid application and allotment also because he has not paid only the call. So these two he would have paid. Then I told you, you are not supposed to take 3 plus 5 because when a person has paid the premium value, premium will go separately into securities premium. Don't take that value with your share capital. So it is not 3 plus 5, it is 3 plus 3 he has paid. So for 1000 shares, he paid 6 rupees, which is 6000. So 1500 plus 6000 gives me 7500. So here, when I was passing the entry, I told you, take this as balancing figure so that you will not have a confusion. But anyways, which while calculating this capital reserve, you have to find out the balance. So you can cross check. Total amount I wrote 7500. In that 1500 Ram, 6000 Shyam. Now, I need only proportionate value. This much they have paid, okay. But now I have taken fully Ram's value, but only proportionately Shyam's value. So for 1000, if it is 6000, for 750, it will be 4500 rupees received. So total will become from the 7500, the amount you computed, it will come to 6000. What is the loss? Already I passed in this entry 2,500. So 6,000 minus 2,500, 3,500 is your capital reserve entry. And like that, in your balance sheet, or if they are asking you a question, how much is still remaining in shares forfeited, you should say, Shyam's how many shares? 250 shares, for which 1,500 is still remaining in the particular account. Clear, everybody? Now we are going to go to the next next question. Okay. So if you can look at the presentation and everything, this much it will be. They are also asking you to prepare the balance sheet. Okay, here I passed all the entries, but they have just, okay, they have just given you only the uh, share, this forfeiture and the reissue entry, but it is okay. You have passed everything. So here it will be, all of you, please see here. The share capital account will be 2,99,000. How 2,99,000? Because 250 shares you are still holding, correct? On 250 shares, the total value, if you are going to take the share capital, whatever is there on the credit side, please add them. Whatever is there on the debit side, please subtract them, and still you will be getting this value of 2,99,000. Reserves and surplus also, what will be in reserves and surplus? The securities premium value. So it will be, you have to take the addition of that and take the remaining as like this. So this is the workings that I have shown. Okay. These shares are reissued. Okay. Suppose if we go to this particular thing, all of you please see the 16th question. You people can try it. I am just going to explain it to you. Okay. A holds 2,000 shares of rupees 10 on which he has paid application money to. B holds 4,000 shares of rupees 10 on which he has paid application and allotment money. C holds 3,000 shares of rupees 10 which he has paid application, allotment, first call. So all of these four people fail to pay their arrears on the second and final call. Therefore, the directors have forfeited their shares. These shares are reissued subsequently at rupees 12 per share, fully paid up. And so it is quite a simple problem, but where the confusion can come, confusion can come when they say so many people are there, they paid something, they have not paid something. So first we need to understand what is what in the question. So we are talking about three people, A, B and C. Okay, we are talking about A, B and C, wherein they have taken the shares of a company whose face value is 10, correct? And how many installments it is being taken? Application, allotment, first call, and second and final call. So there are four installments. So first thing, when you read the question, you are supposed to, Gauri, I will take your doubt. Just give me some time. Let me finish this. Write your doubt and I will get back to you. Okay. So the face value comes to 10. In that, first thing is application money of how much is not being. Okay. Application money 2,332. Okay. So when you see the application money is 2, allotment is 3, and this is 3. The remaining will be, if you are going to do, it will be the balancing figure. How did I get to know this? Very easy. When I was reading the question, I found that Mr. A paid the application money of 2. From that information, I got application is 2. Then I came to B. In B, he paid application and allotment of 3. So application 2 rupees, 3 rupees allotment also he paid. So from that I understood allotment is 3. Then I came to a person C who paid application 2, allotment 3 and the first call as 3 rupees. Okay. Then they told me all the three people have not paid the final call. They didn't give me the second call value. What will I do? I will find it as the balancing figure because I have all the data required. Okay. So here it will be the second and the final call. What it will be? That's all. Now, my dear students, come here. A, B, C. Paid, which is nothing but the shares forfeited. unpaid, which is nothing but the calls in arrears. Now I am going to tell you, or you are going to tell me, what is the amount paid by A? Only the application. So he paid only 2 rupees. How much is the amount paid by B? He has paid application and allotment. So it is 2 plus 3, which is 5. He has paid that. How much has C paid? Application, allotment, first call. 2 plus 3 plus 3. He has paid 8 rupees. So out of the total 10 rupees, okay, A has paid 2 rupees. That means he has not paid 8 rupees. Otherwise, also you can see here, he has not paid allotment 3. He has not paid first call 3. He has not paid second call. So it will be 3 plus 3 plus 2, which is 8. Okay. Now come to B. He has paid application allotment. He did not pay these two calls, which is 3 plus 2, 5. 5 rupees he paid. 5 rupees he didn't pay. Now come here. This person has only not paid the final call. Simple, 2 rupees. Now you add 8 plus 2, 10, 5 plus 5, 10, 2 plus 8, 10. So are you getting the value? Now can we see what are the number of their shares? A is holding 2000 shares, B is holding 4000 shares, and C is holding 3000 shares. So my dear students, how will you pass the shares forfeited? Very, very simple. Shall I pass and show it? Shares forfeit, share capital account. That is what you need to pass on the debit side. 2 shares forfeited, 2 calls in arrears. Correct? So how many shares? 2000 plus 4000 plus 3000. So totally I have 9000 shares into 10, which is the face value. No premium, nothing. No, don't worry. So directly write 90,000. Is this clear? So how much you have paid? 2000 into 2, 4000 here paid. And then 4000 into 5 plus 20,000 plus 3000 into 8, 24,000. So it will be 24,000 plus 20, 44 plus 4 is 9. 44 plus 4 is 48,000 is paid. That is shares forfeited. Unpaid is 48,000. I mean, not 48,000. It comes to 32,000. Correct? Not 32, 42,000. 8021. Okay. 42,000. Madam, how did you arrive at this? You can even do here also. How much is unpaid? For 2000 shares, 8 is unpaid. So 16,000, 2000 shares into 8. Then here 4000 shares into 5, 20,000 plus 3000 shares into 2, 6,000. Correct? So it will be 36 plus 6, 42,000 is unpaid. Okay. Everything was reissued at 12 rupees. That means what? Very high reputation this company has. So you are reissuing at a higher value. So bank account to share capital. What is the share capital value? 9,000 shares into 10. So still this remains as 90,000. But I have received 12 rupees, which is 1,08,000. So the remaining, how much? The remaining 18,000 is nothing but securities premium. What, madam? Securities premium can come here also. Yes, it can come. So this is reissue at premium. Now you tell me the last entry. Shares forfeited account debit to capital reserve. Is there any entire value will go as the profit to the company? 48 and 48, because there is no debit. No, here is there any debit? No debit, so just 0. That minus this comes to 0. Clear, everybody? So this is one simple question. So with this we have worked out all the illustrations, and finally you have a small concept which says issue of shares for consideration other than cash. What is that? Issue of shares for consideration other than cash. What is the meaning? When I was teaching the chapter in the beginning itself, I told you sometimes, or I mean sometimes the company can issue shares for a consideration. That means always it did not receive money, but sometime if that particular person has given you something very valuable, like let us say you have purchased a plant and machinery that is required for your business, but you don't have so much of cash to pay to them. So in that case, you can give what? You can give your particular shares to them. And what is the benefit they will have? They can become the shareholders. They will also be eligible to vote. They will also be eligible to get the dividend if there is anything. And finally, the value of the particular asset that they have given, they will get a number of shares. So, my dear students, this concept will also be coming here when you are going to, or when we are going to see issue of debentures. Okay. So, the main thing you have to see is what is the asset value divided by what is the issue price of the share. That will be the number of shares. So in a case where the shares are issued for consideration other than cash, the maximum thing that can come to you will be computation of the number of shares. Okay. Other than cash, there will be this. I will give you an example. I am getting an asset worth 1,20,000 rupees, plant and machinery. Okay. Now, the company is going to issue the shares at the value of 10 rupees is the face value plus 20% premium. That means on 10 rupees, if you're calculating 20%, it will be 2 rupees premium. So when I use the word issue price, it is nothing but if there is a premium, add with the face value. I am not using the word nominal value, face value. I am using the word issue price. So there can be three things. Issue price can be equal to the face value. Issue price can be more than the face value, which means I can issue it at a premium. In that case, what will be the formula, or what will be the value of issue price? Face value plus premium. So I'm taking it here. Face value is 10, premium is 2. So 1,20,000 worth asset I purchased, to whom my issue price is 12. So to that particular vendor, I will issue 10,000 shares. So he will be given 10,000 shares in my company for the asset of 1,20,000 that he has given to me. Is this clear? Now we come back to this particular final wherein issue of shares for consideration other than cash. The simple entry is asset account debit, share capital. When you received money, it was bank account debit to share capital. Now you are not receiving money, but you are getting assets instead of that. So the single entry will be asset account debit to the share capital. It will be asset account debit to the share capital. As simple as this. Okay. So now please come down. This is quite simple. All of you please see. X company was incorporated with an authorized capital of 90,000 of rupees 10 each. The company purchased land and building from Y company for 4 lakh rupees payable in fully paid up shares of the company. Balance of the shares. So the total value is 90,000 into 10 gives you 9 lakh rupees authorized capital, out of which 4 lakhs they are issuing to a person or to Y Limited because they purchased land and building. So from 9 lakhs, I remove 4 lakhs. The remaining 5 lakhs will be issued for cash. Okay. They are the shares issued for cash. So when I'm purchasing the building, what is the entry they're passing? Asset account debit to, from whom are you purchasing? Y Company Limited. So 4 lakhs. Because the shares are issued at 10 rupees only. There is no premium in the question. So simple. Then it will be Y Company Limited to equity share capital. So you should also show who is Y. So you're doing like this. And it will be Y Company Limited to equity share 40,000 shares of 10 each. That makes it 4 lakhs. Remaining, they're issuing it for cash. So you don't know what is the installment application, nothing you know. So just you're writing bank account to share application allotment together itself, or you can just simply pass one entry bank account to share capital account 5 lakhs. That's all. So the balance sheet will look very, very clean. Total shares will be 9 lakhs, whatever you have issued, correct? In that 4 lakh is towards the plant and machinery and 5 lakhs is towards your cash and cash equivalents. So with this, we have completely dealt with the unit number 2 and finished it. Now the time is 12:30. Another 15 minutes, I will try to cover the theory part of debentures so that tomorrow we will be looking at four important concepts of debentures and completing them. Clear? So now we move on to the unit number 3, which is issue of debentures. At 12:45, my dear students, I will take all your doubts, so don't have to worry. So we have completed the issue of shares completely. We are going to the unit number 3, which is issue of debentures. There is a little theory portion attached to this. Let us finish that and then do the questions tomorrow. Now, coming to what is a debentures, okay, or what is a debenture? Like we were discussing in the unit number 2, we were completely talking about shares. So I then told you a company for getting money, it can issue different types of instruments. One thing is issue of shares. In shares also, preference shares and equity shares. Preference shares are those shares which have a preference over the equity shareholders in two things: in the repayment of the capital at the time of winding up and during the payment of the dividend. So first preference shareholders will be paid. If anything is remaining, then equity shareholders will be paid. In the at the time of winding up also, if the capital has to be paid, the first preference given to preference shareholders, then the equity shareholders. Likewise, we also have a second category of instruments called as debentures. But the only difference between a share and a debenture is the debenture is like a loan. Instead of going for a bank loan where a company prefers, or it says I can go for a bank loan but there are a lot of restrictions, it is very difficult for me to always keep following it up. No, so let me issue the debentures, which is also like a loan. So when a company issues the debentures, you need to understand it is like a bond. Bond means the company says, please take my debentures. Once you accept my debentures, the company becomes liable to pay the interest plus principal. That means what, madam? Yes, debentures carry a fixed rate of interest. Like if you take the bank loan, you are supposed to pay an interest. Here, the difference is you are taking the money from the public for which you shall pay the interest. So there is no change in that concept. Same concept only. But the thing is, the instruments are different. Okay. There it was called as share capital. Here it will be called as debenture capital. But you will use the word percentage debenture. Always the percentages denote the fixed interest rate. What is that? They denote the fixed interest rate. So there is nothing much. Where you use share capital, you will use the word percentage debenture. So debenture is an instrument which is in the nature of a loan or a bond issued by the company. Once they have paid and you have become the debenture holder, it means that you have become the creditor of the company. You get the rights, but you do not get the voting rights. There are no voting rights because are you the owner? Are you holding shares? No, I'm holding debentures. Then what is my benefit? I will get a fixed rate of interest. Now, this fixed interest rate means even if the company is making a loss, it is supposed to pay. So it is like charge against the profit. There are two concepts called as charge and appropriation. Charge meaning even if there is a loss, you need to pay. It is fixed, nothing I can do. Appropriation, like the dividend, I will pay if only there is a profit. If there is a loss, I will not pay. That is called as appropriation. But the debenture interest comes under the heading of a fixed thing, which is a charge. Okay. Now the type of debentures. So the we also saw types of preference shares. No? So the same way, when you talk about the type of debentures, my dear students, simple. First one based on the security part. You can have secured debentures or insecured or unsecured debentures. Not insecured, unsecured. Now, the secured debentures means the simple understanding is when a company is giving the debentures, the debenture holders can have a doubt. Will this company really repay back to me? Correct? The same doubt will bank also will have. When you go to the bank, when you're asking for the loan, it will ask for a security. The same way, when you're asking people for money, the people will have a doubt and they will say, I need some security. No, that is when, if you are taking a secured debentures, it means that the company is giving the assets. It means it is creating a charge on its assets. So it says, in case of I fail to pay the money, I don't pay your money, it is okay. I am securing your debentures by creating a charge. That means my particular assets in the future, if I am selling, I will give you the first charge. Whatever amount I get, I will give you the first benefit out of it. So, in case of a secured debentures, I can create a charge on the specific assets called as the fixed charge, or I can, so few, I have 10 assets, out of which on 5 assets I have told this specific 5 assets, if I don't pay money to the debenture holders, I will sell this assets, give them the money. So that kind of a charge on specific assets is called as the fixed charge. Or I can sometimes say, I am securing the debentures, but it is not like what you think. On all my assets, there will be some charge, which is the floating charge. So even in future, if I'm going to get some assets, that floating charge will apply to those assets. So the meaning is, in the percentage, if I am selling those assets, entire money will not go to you, but there will be a percentage I will be paying you. So this is the meaning of a secured debentures, which is secured on the assets of the company, wherein you can have two types of charges, fixed charge and a floating charge. Fixed charge is on the specific assets of the company. Floating charge is on all assets of the company at a particular rate. So the meaning is, in the future, if don't pay, I'm not paying your money, you come and sell the assets and take the money. Okay. Unsecured is there is no security. You just get it on the belief that the company will perform and it is going to give you your interest and it is going to repay. So if a company has really good reputation, then you can get the unsecured debentures. Is this clear? And second one, from the point of view of convertibility, we have already seen this in the preference shares also. We can have convertible debentures, non-convertible debentures. Non-convertible debentures means debentures will remain debentures. You cannot convert them at a future date. But in the case of convertible debentures at a future date, you can make them your shareholders. So specifically, from debenture holder, you become an equity shareholder. So in the future, if you're able to convert the debentures into another form of instrument, basically these shares, then it is called as a convertible debenture. Okay. Then from the point of view of repayment, you can have redeemable debentures and irredeemable debentures. This is what we have seen even in the case of preference shares. Those debentures which will not be repaid during the lifetime of that particular business are called as irredeemable, and those will be repaid within the time. That is, when I'm issuing the debentures itself, I will talk about the repayment terms. I am telling you, I am issuing 10,000 5% debentures of rupees so and so, which will be repaid after 5 years. So when I'm talking about the repayment conditions, it will be falling under redeemable. If I tell that I am not going to redeem except at the time of closing the company, then it will be called as the irredeemable debentures. Clear? Then I have a concept called as negotiability. So negotiability means what? You would have already read in your particular, okay, this comes in your higher chapters. So the negotiable instruments, when you're reading, technically simple. When I purchase the debentures of a particular company, the debenture, the company will in turn give me an acknowledgement, the debenture certificate. Okay. So this debenture certificate is like a proof. When you purchase any particular fan, everything, you will get a bill. The same way, when you purchase the debentures of a company by giving your money, it will also say that this is your debenture certificate. Now, the certificate is very, very important. Based on who is holding the certificate, the negotiability will define. Based on the negotiability, you have registered debentures. I'll write here. You have registered debentures and you have bearer debentures. What is registered? When you are purchasing the debentures of a company, the register, the debenture register of the company will make a note of your name, address, details, contact number, everything. So if your details are entered and if the company is issuing a registered debenture, then that particular person who is registered as the debenture holder with the company with his details mentioned in the register only will be eligible to get the interest. He is the only person authorized to receive back his the capital. Suppose if something happens and he passes away and there is another person who wants to claim, the company will not give him. In that case, you can ask me a lot of doubts, but technically, let's not get into the legality. You people should understand that whoever is registered or whose name appears as a registered debenture holder in the register, only to them the interest and the particular capital will be paid. Now, the bearer is the opposite. Anybody who holds the debenture certificate can be receiving the interest and he can be repaid. That means if you are holding a bearer instrument or a bearer debenture, very important to protect your certificate. If somebody steals it, then they will become eligible because your names are not registered. So the company is not bothered. Whoever produces the certificate, they will pay. And the final type of debentures are first mortgage debentures, second mortgage debentures. Simple. I told you, you will put a fixed charge. No, if you are putting a fixed charge, if you are given first mortgage debentures, it means that when the asset is sold, on that amount, you will have the first charge. You will get the first rights on that particular amount. That is the meaning of first charge or first mortgage debenture. Second mortgage, you will get the right in the second place. That's all. Somebody else will be given the first right. After their amount is over and they take their amount, the second charge will be given to the second charge or second mortgage debentures. Clear? So that is with the particular thing. So debentures is an instrument issued by a company, which is like a bond, and they are acknowledging the debt given to you. Once you are investing your money in the form of a debenture capital into the business, you people become the creditors. And when you become the creditors, they are eligible for an interest. The interest is a charge against the profit. It's not an appropriation. So there will be a fixed rate of interest and then everybody is eligible to get it. Usually you will get the interest, debenture interest half yearly. Okay. So whenever the interest is being paid, TDS will be getting deducted and then you will be receiving the interest, the debenture interest. These are the features of debentures. And next are the types of debentures wherein you can have different types. So basically, based on five things, you are getting the differences or types. The first one is based on the security. You can have secured or unsecured debentures. Secured debentures are those which are secured by creating a charge on the fixed assets of a company. So when those assets are sold, the first priority or the first benefit should be given to the debenture holders. Okay. You can create a fixed charge or a floating charge. Fixed charge is when you create a charge on a fixed specific assets, it is fixed. So those assets will belong to the debenture holders. Floating charge, you create it randomly, uniquely on all the assets of the company in a particular proportion. So that particular proportion you can sell and that will belong to the debenture holders. Unsecured, there is no security, nothing. It is on your own will and think that you are giving your money on the trust that the company will perform better and it will pay back my money to me. Clear, everybody? And then we have on the basis of convertibility, convertible and non-convertible. Convertible are those you will be able to convert it within a given period of time. Non-convertible are those during the entire lifetime of the company you are not going to convert. Next, you have redeemable. I'm sorry, what I was talking about was redeemable, irredeemable. Convertible means at a future date, you will get the option to convert them into the equity shares and get voting rights. Non-convertible, you cannot convert them during the lifetime. Like they will be repaid back as debentures only. Now, irredeemable, redeemable, when you are able to, or at the time of issue itself, when you are talking about the redemption terms, you will say these debentures are issued for a period of so and so years, and I'm going to repay it back after particular some time. Then you will call it as redeemable. Irredeemable, you are not going to repay it during the lifetime. And then you have uh, registered debentures and bearer debentures. Registered debentures is very strict, wherein the person whose details are entered in the registered alone can be called as the debenture holder. He will only be entitled to receive the interest and the capital on repayment. Bearer, anybody has who, any person who has that certificate will be called as the bearer. He'll be called under the particular thing, and it is not required for him to be registered. And finally, you have first mortgage debentures and the second mortgage debentures. Okay. So this is the major concept that we have seen today. And I would like to do quickly a very small concept in 5 minutes and then go ahead and take up your doubts. Okay. So when we are talking about what are the things that we are going to look at this particular unit is, I'm going to look at the things as issue and redemption. Okay. So what I'm talking about redemption or what I am doing here is very simple. When I'm issuing the debentures, the terms of redemption will be given. Okay. So now let us talk about only issue today. Issue is very simple because we have already seen how shares are being issued. The same thing except for the only change that I have to change the word wherever I put share, I have to put debenture. Okay. So now when I'm coming to the issue of debentures, debentures can be issued at par, they can be issued at premium, and the concept that I'm going to introduce is they can be issued at discount also. This was not applicable in the form of or for the shares, correct? Because shares explicitly, only sweat equity shares can be issued at discount. But in debentures, that is not a necessity because it is like a loan, correct? So when will a company go for discount? When it is not attractive. People are not buying the particular debentures of the company. So it wants to reduce the price. So this is allowed in case of debentures, but it is not allowed in the case of shares. Clear? Now, when the debentures are issued at par, here also the entire value or the face value can be broken. Okay, but for the ease in all of your questions, maximum there will be application, there will be allotment. Okay, if it is at par, there is no change. Please, all of you see, the first entry will be bank account debit to debenture application. This is the no prorata, nothing. The most easiest is you should know thoroughly the issue entries. That's all. Simple. What is the second one? Debenture application. You should do the transfer entry. So here transfer is to what? The debenture capital. But what is the name given? It will be percentage debenture account. That's all. We come back here bank and this. So this is with regard to application. Then when I come back to allotment, my dear students, the second thing, when I come to allotment, the same entries will be coming here also. But first will be the transfer entry, then will be this. So let me write it here. It is nothing but debenture allotment account debit to percentage debenture and then bank account debit to debenture allotment. So, my dear students, in all the questions, it is not required that you need to get these two. Sometimes only application will be there because SEBI does not require it to be divided into so much. It's only the prerogative of the company wherein it wants to have installments or not. Okay. So, this is when the debentures are issued at par. That is 100 rupees issued at 100. So, application 50, allotment 50. So, it will be 50 here, 50 here, again 50 here, 50 here, again 50 here, 50 here, 50 here, 50. Now we come to the second portion when the premium is involved. 100 issued at 120. So I will say application 50, allotment 70. So immediately 50 plus 20, 120. Okay. Now what is the effect? This won't change. When you come here in your transfer entry, you will introduce securities premium. What did you do for shares? Same thing here also. It will be 20 and this will become 70. Why, madam, you are introducing securities premium? Because the debenture, the company has a very good name in the market. So even if it issues at a higher price, people are ready to get it. Give me, give me. So I am taking it at a premium. Here also the same concept. Premium will not be collected or premium should not go in with the debenture. It should be shown separately because it is like a profit for the company. There are no conditions attached with this. Just securities premium account, it will go. Securities premium account is governed by 52. Whatever amount I put it in securities premium, I can use it for some purposes. That is this value for premium. Now come to discount. So this discount concept you have not seen till now. So 100 rupees value issued it at 90. On application 50 I have received. On allotment I received 40. Here the discount is there. Okay. So how will it be, ma? Please see here on 40. Okay, I cannot write it there. 40 has become 50 minus 10. Here it was plus. Here it is minus. So the discount is a loss to the company. This is a concept that we are learning now. Whenever the discount is given on the issue of debentures, what will happen? Which entry will get affected? Not all entries are getting affected. Simple. Application will remain the same. Here the discount is collected with allotment. So in the allotment entry, which entry? Transfer entry. Whenever there is a premium, whenever there is a discount, only touch the transfer entry. In the transfer entry, what is happening? Face value is 50. But what is the actual allotment value? Only 40. My dear students, I'm just considering it is one debenture. Okay, that is why I'm writing the value directly. Now the debit side is short. So I will be writing discount. What is the account name called as? Not securities premium. Discount on issue of debentures account. That big name you're going to write. Finally, this is a loss. It will go into the P and L? No, it will sit in the balance sheet. Every year you should bring it to the P and L and write it off. That concept we will see a little later. So, my dear students, this will be the change. And here, debenture allotment is only 40. So, bank also I will receive that. So, the effect of issue at par, no change. Premium, the transfer entry will get a change. So percentage debenture, whichever side you write, the same side you should credit the securities premium because you are giving it at a higher value. It is a profit. If you are giving it at a lesser value, then it will be called as the discount. Okay. It will be called as the discount and it is a loss for you. So it should be debited. Is this clear? So tomorrow with this particular concept, we have seen for the issue and then we will see the terms of redemption also. I will see or I will be talking about the terms of the redemption also. So on this particular note, we have completed and now we will be taking the doubts. Manish, can you just let them and I will answer their doubts now. Anybody? I think somebody, Gauri, had raised her hand. Anybody? No doubts? That clear? Gauri, yeah, tell me.
Debenture holders are like a creditors, ma'am, company.
Yes, they are creditors of the company.
And also illustration number 15 in balance sheet, I can't understand.
Illustration 15. Whatever question we did. Okay, let me go
Due
ahead
to
and yeah, okay. The shares, right?
Yeah, ma'am.
Okay. Okay, great. Illustration 15, where you are not able to understand is come here. The share
Balance.
capital, yeah. Hmm. See here. The share capital, how much you have issued, Gauri? 30,000 at the rate of this much, which is nothing but 3 lakh rupees. But in that, there are few shares that you have taken back. There are few shares which you have issued also. So I will come back and I will talk about that. See on the thing. So
Yes.
what are the total number of shares? 30,000 shares. Actually issued shares were 30,000 shares, correct?
Yes, ma'am.
Out of that, what did you do? You have taken back some shares, correct? So how many shares you have taken back?
If
1,500, which was Rams and Shyams put together. You took back 1,500. So that should be subtracted. So how much you will get? 28,500. Am I right? Then what did you
Yes,
do?
ma'am.
You reissued the shares. How much? To the extent of 1,250 you reissued. That means again the capital, the shares are increasing, no? So now the actual value will be 29,750 rupees. You have first 30,000 you issued, then 1,500 you forfeited. You got it back. And then what did you do? Reissued 1,250. So I'm adding this. These are the number of shares at the rate of rupees 10. So what will be the actual value of share capital? 2,97,500. Correct? But my
Yes, ma'am.
dear, there is an amount. I told you when I was working out, Shyam's shares are not totally reissued, correct? So there is an amount sitting in the shares forfeited. How much is that amount? If I am not wrong, for 250 shares, it was 1,500, right? So always the shares forfeited will be added to the share capital value. So actual number of shares as per the addition subtraction comes here, and the shares forfeited. That means what? Shares forfeited is the amount that is there as shares in my balance sheet. I have the amount collected. So it will come to 2,99,000. Clear? Now, when I
Yes,
am
ma'am.
talking about the reserves and surplus, my dear Gauri, we have worked out the entire value, right? So you can actually pass the, I have passed all the entries, no? So go back, see wherever the capital reserve or securities premium is coming, these two things you should take, okay? The
Yes, ma'am.
securities premium coming on the credit side, you should add everything. If the securities premium is coming on the debit side, yes, in forfeiture entry, there is a debit amount of 1,000 rupees, correct? That you should subtract. And the final capital reserve also, we have 3,500. No, add that also. So in your total entries, please add the securities premium on the credit, add the capital reserve on the credit. And if you have any securities premium on the debit side, or capital reserve on the debit, subtract it. If you do it in this fashion, you will get the capital reserve, reserves and surplus value also. Clear? Now, when you
Okay.
add these two, the total that you are getting, directly you can take it and write it as cash and cash equivalents on the asset side. Or else you can take the bank account, which is there on the debit side in all of your entries, add them and write it there. It will be easy. So the balance sheet, as per your textbook, please see, it will consist of only three items, out of which one I have already worked out, which is coming to 2. Yeah, Gauri, was that clear? Whatever I told you?
Yes, ma'am.
Oh, so what you have to do is basically go ahead, look into your particular entries, and then see what is the bank side, whatever the debits you have received. Please go ahead with that, add it, and see if any bank credit is being done. And then accordingly, if you do it, your balance sheet will tally. So basically, it's only the three items, and you can do it accordingly. Right? The next one. Anybody else apart from Gauri? Or Gauri, do you have any other doubts?
Ma'am, I have another one doubt. In the
Hmm.
illustration number 15 only,
Hmm.
equity share allotment account also contain a premium security premium account rupees 2.
Correct.
And why we show it again in equity share allotment account 500 into 5? We already debited security premium account, Nama,
Yeah, you
because we
debited it.
can't.
Correct. Where did we show? Which entry you're talking about? Are you talking about the issue entry or are you talking about the issue entry or you're talking about the shares forfeiture entry?
Share for future entry.
Why are you again debiting it? That is what I'm saying, Gauri. Whenever there is premium in the question, in the share allotment, that you will write normal wala. That is over. When you come to shares forfeited, you need to check whether this person, whoever has not paid, whether he has paid the premium amount or not paid the premium amount. Now, here in this question, there are two people who have defaulted. One is Ram, the other one is Shyam. Okay. Now, when you talk about Ram, he has not paid the allotment. That means, has he paid the premium or not?
Not, ma'am.
When you have not paid the premium, what did I tell you when I was teaching? I told you you are supposed to debit it because that is also a loss for you. So I have taken only 500 into 2. Did I take 1500? No, because the remaining 1000 shares of Shyam, he has already paid the premium value. So for him, I have not considered because the concept says for that person who has not paid the securities premium alone, in the share forfeiture, debit his value, debit the securities premium account because that is also like a loss for the company. Okay.
We are debited that, na, ma'am. Again,
Hmm.
to equity share allotment account, we
Hmm.
are showing 5 rupees instead
That's
of 3
nothing.
rupees because we already debited 2 rupees.
Correct.
In
Now,
study mode,
hmm,
in study models, they are showing 500 into 5 rupees calls
hmm,
in arrear.
correct. No, they will show 500 into 5 only because actual allotment is 5 rupees. No.
2 rupees. 5 rupees.
3 rupees is the actual value plus 2 rupees premium is 5 rupees, correct? So the allotment, whenever I am
Okay.
talking and they have not paid securities premium means share allotment or nothing but calls in arrears. Okay. In our question, we showed it as calls in arrears. In your textbook presentation, they are showing it as equity share allotment. Remember, you have to take the entire value, including the premium. Because you are debiting the securities premium there, right? The allotment will be inclusive of the premium only. Okay. For the other
Okay.
person, when he does that particular first call, no, for fine first and final call, there is no premium. So you will directly take that particular value of the amount he has not paid. That's all.
Yeah, ma'am. Thank you, ma'am. But in
No
case,
problem.
ma'am, they
Hmm,
pay
hmm.
security premium account, then, ma'am,
Then remove the securities premium from the question. In the same question, that 1000 shares Shyam, he paid the securities premium, correct? So what did we do? We removed that 2 rupees and we considered it as 10 rupees only for him. Remove the premium and make it a par value question. Okay?
okay, ma'am.
Ansupa. So in this case, what should we do? In the exam, what should we write? Which one? Can you get unmuted, Ansupa? Yes, if you can get unmuted and ask me, then that will be better. Ansupa, are you there? So in this case, what should we do? Which case? This case. Hmm, okay. I think if you're able to like come out and ask the questions, it will be, ma'am, in the illustration 3, the date of receiving the final call is not mentioned. Okay, so what is that you want? If they are mentioning the date, you write, ma. If they're not mentioning the date, just leave that and write. But when you have to calculate the interest on calls in arrears or calls in advance, they will definitely tell you. Okay. If it is not mentioned, no problem. Right. Any other doubts? Okay, Ansupa. I want all of you to please try your illustrations and also the practical questions. Then only you will get a hold on whatever we have been taught in the class. Otherwise, it will be difficult. The first three classes you people can go through. It's there on the YouTube, and then again and again start practicing. One of the most easiest concept, first time when you start doing, yes, I understand it will be a little difficult. With practice, write down the concepts. Why I am doing like this, why I am not doing like this, why I am taking entirely. And for few things, remember the rules properly, like straight to the share capital, it will be the face value. And then premium in the forfeiture, received premium, not received premium. If you have not received premium, remove that premium from the question. I mean, if you have received the premium, remove it. If you have not received the premium, I should hold it. How many number of shares? What I have to do? How are the working notes? Where are the working notes coming? This will come only by practice. Is it clear? Akshit, yes. Can you unmute Akshit, please? Yes, Akshit.
Ma'am, in
Hmm.
200 pages notebook,
Hmm.
for study material, from where we should write for this 200 pages notebook for
Hmm.
writing this chapter, ma'am.
Hmm.
So where we should write from? PDF is not there, so from where we should write,
Aha, okay.
ma'am?
I will give you the PDF. Don't worry. Okay. So that is what you're asking me. Okay. Before I give you that PDF, whatever I have taught you, write it in your own words and start working out the questions. You will understand the concepts. Make notes of it. I will also give you that particular thing right away. Okay.
Ma'am, for questions, which topic we have to practice, ma'am?
Sorry.
Questions, which topic we have to practice for today?
For today's topic, re-practice whatever I have done, the illustration number 14, illustration number 15, illustration number 16 and 17 also. We have done 4 illustrations in the class. Re-practice them. Okay. Okay. Ansupa, please make note of your doubts, ma. Okay. Because if I'm going to let you people like ask the queries then and there, the flow of the class will be disturbed. Okay. Just write it down. I will clear it at the end. Okay. I know we have done it on purpose little bit so that the class doesn't get distracted. So like this, I will take your doubts and then do it. Okay, Shoyab, thank you. The others? Akshit, you have a doubt again? I will be giving you the notes also, don't worry. Okay, I think with this we can complete this particular session. Tomorrow, please be back on the same time at 11 o'clock. We will go ahead and do the debentures, which is one of the most interesting topic. Okay, thank you. Yeah, over, Manish.